Welcome to another edition of the PlanWell podcast, hosted by owner and attorney of Cary Estate Planning, Paul Yokobitis.
So today we're joined by Austin, our marketing coordinator. Say what's up, Austin.
Hello, everybody.
How are you doing today?
I'm doing pretty good, Paul. How about yourself?
Good. You excited to talk about the payroll protection program, also known as PPP?
Yes, I am ready to unpack this. There's a lot to it.
Awesome. Yeah. And so this has been in the news quite a bit lately, really ever since any actions have been taken by Congress, obviously at the federal level. And it really was spurred by just the reality that a lot of businesses were shut down. And the implications of that are not just for the businesses themselves, but obviously the employees of the business. So in an effort to stop really widespread unemployment, this program, the payroll protection program, was part of a much larger bill, passed by Congress and then ultimately signed by the president to basically give emergency funding to businesses that met certain parameters. But the goal was for them to use that money to pay their employees and to keep them on. And so they were incentivized to use those funds for payroll to maintain their current headcount, or at least maintain their current positions. Obviously, the Congress wasn't trying to force businesses to keep bad employees, but it was definitely trying to incentivize businesses to maintain their current, team numbers.
Right.
And so, if you were forced to fire somebody because of poor performance, it incentivized you to replace them with someone else rather than just sort of keep the position vacant. And so I think probably the biggest news that comes from this is not the program itself, but it's incredibly poor rollout. And that's to be expected. The SBA generally does something like 20 billion in loans in a year. And they were immediately asked to do, in the first round of funding, it was 350 billion.
Yeah.
To try to roll it out within 2-3 weeks.
Right.
All with under new program rules that hadn't even been written, and a lot of questions as far as how these sorts of loans are going to be guaranteed and what the actual closing formalities need to look like. But the reality was that just wasn't really that realistic for a government entity to be able to do that. But so what we see is obviously what the news shows us, and then what we hear from our friends who are business owners and what we've experienced as business owners. And so a lot of people thought this first round of funding was going to last a lot longer than it did. And it really only lasted a little over, or I guess around 2 weeks.
Yeah. And a lot of people applying.
Right. And then we see stuff like Shake Shack refunding their money, and we see the Los Angeles Lakers refunding their money, and it just sort of you get this mixed review from I guess public perception of what the utilities of this program was supposed to be. Seemingly was not for companies like the LA Lakers, and
right.
It was seemingly not for companies like Shake Shack. And so it's kind of funny that we see these sort of seemingly altruistic moves by these larger, companies that probably don't need the money to return it, right? They're giving their money back. It's like, well, it's
that's
not like
the marketing play they got to do. So
that's right, yeah. Well, it's, they're trying to save face in public, but what people don't realize is that it's not like they were just on this list of people who the government just cut a check to, like the stimulus money that people got individually. Like it's not like anybody had to apply for that. That was just, given to taxpayers if they met certain income parameters. But the payroll protection program was an application-based program and an eligibility-based program. So you have to put your name in the hat. It's not like, this was just, the government walking around with checks and they came upon the LA Lakers and gave them a check, and the LA Lakers said, "Oh, no, thanks. We don't need this."
Yeah.
No, they had to submit, quite a bit of tax forms and applications and supplemental documents in order to even be eligible for that sort of money.
Right. It's not like an easy process to do that, if I'm not mistaken, right? Like it's going to take you a while to sit down and do it.
Right. And the application itself was not too bad. It's about 2 pages long. And And so when you consider the traditional SBA lending process, it's drastically easier than that. And that's mostly because, underwriting for the SBA is a lot more drawn out. There's a lot more investigation into individual or owner financial records and credit worthiness and that sort of stuff. And they're usually trying to secure it, with some form of collateral. And, all of these, loans that were under the PPP are all unsecured, and they weren't based on the financial, credit worthiness of the owner. They were basically just based on, whether you, from a high level, even were eligible for the program, meaning you were a small business with employees less than or at 500 employees or less, and then that you had payroll expenses that you could show evidence of. And usually that's going to be through federal employment tax filings, through the 940 form and the 941 form, and then probably like we submitted our 2019 profit and loss statement. We submitted some more ancillary stuff that just sort of shows additional expenses that were incurred. Like, you're able to add up a few different things in order to get to this overall number. But the process compared to the traditional, SBA 504 or SBA 7A process was drastically easier. Mm-hmm. The issue, though, is that it's like trying to suck an elephant through a straw. There's just so much coming, and the bandwidth is only so wide. And so, from a very high level, the basis for eligibility was first that it's a small business, meaning a company that had employers, or an employer with less than 500 employees. And then you would basically be capped at 10 million per loan. So, and I use the term loan loosely because, the objective for most of these program participants is forgiveness. And we'll get to that in a little bit too. But you basically were able to look at either your 2019 numbers or your trailing 12-month numbers. And, or if you were a brand new business for 2020, you could look at the first quarter numbers for 2020 and basically submit what amounted to your average monthly payroll multiplied by 2.5. So that was supposed to be, the basis for your loan amount. And so there was a lot of question as to what you could even use for those numbers, to multiply by 2.5 to come to your overall loan amount. And the confusion was largely because the rules weren't clear and the rules kept changing. So the SBA was in charge of creating the rules, and they issued interim rules and then interim final rules, and then they clarified the interim final rules, and then they finally issued guidance on the promissory note. And so you have basically this failure to launch where it's almost like a false start. Like, somebody pulled the gun and nobody was ready. A lot of banks were very clearly not prepared to administer this program at the local level. Because there just wasn't any guidance. And so you saw some banks jump the gun a little bit and basically do loan advances, basically under the assumption that, the SBA would eventually figure it out. So they were basically fronting their own money and then hoping that the SBA would make things right. And maybe that'll work out. But what these ended up being, though, is a 100% federally guaranteed loan that was basically guaranteed by this money that Congress had set apart. Mm-hmm. And so the first round of funding was $350 billion. And, that was meant to cover probably a month. And it covered probably less than half of that, or it lasted less than half that length of time. And so
are you surprised by that?
No, not at all.
Right.
Because, they didn't actually require anybody to show need. They basically made you swear, under penalty of fraud and that kind of thing, that you could, or your business was impacted in some way from coronavirus, like from the pandemic. But what that meant, nobody really knows exactly what that, hardline definition is. It basically can be, you could really create any sort of, negative implications from that on your own business.
Exactly.
And so it's not just now either. Like it basically would say that is, or would like, or will be impacted by COVID. So that's really subjective. It's really hard to bust out your crystal ball and see, what the next 2-3 months looks like. Because while we're all kind of under these state-based stay-home orders, we don't know what those are going to do from a month-to-month basis. So while you may be comfortable in March and April, your business could take a nosedive in July, right?
Right.
So pretty much every business owner that I know of that fell within the eligibility parameters applied for this loan. And the sort of second aspect of it is the fact. So first, you don't have to actually prove need, but second is this is ultimately the ideal outcome is that it's a forgivable loan, meaning it's basically free money. So I'm not sure I've ever met anybody who doesn't want free money, right? So if you end up using these funds according to the rules, that they're being administered under, you qualify for 100% forgiveness of the amount that you're given. Otherwise, and this is even more significant, is even if it's not forgiven, it just turns into a 2-year 1% loan, which is the cheapest money you could possibly get.
Yeah.
So you're sort of met with this proposition of, do I want free money or do I want the most favorable lending terms that I've ever gotten in bank lending? So either way, it's pretty much win-win for these businesses. Now, the program is very much meant for the businesses that are hurting right now, and the ones that are struggling to make payroll and who could really use that immediate cash injection. But that's definitely not everybody who got it. And unfortunately, some people relied on advice to their detriment that, you should wait and apply with, a specific bank that's an SBA lender, as opposed to like your, community bank. I know a lot of people have had issues with big banks like Bank of America and Wells Fargo and Chase, basically saying, sorry, we're too busy, we don't have time for you. And then if you, normally bank with a community bank that's not an SBA lender, a lot of people were just sort of up a creek without a paddle, because some of these other banks who were SBA lenders were not accepting new clients for the PPP program. So some people just sort of de facto, by the way that things shook out, got excluded, at least from the first round.
Right.
And that's, we're talking 2-3 weeks of vital time. The initial applications were able to be submitted on the 3rd of April. So, today we're talking on May 1st. That was almost a month ago. And the second round of funding was approved, last week. So it's or earlier this week. And so it's one of those things where the timing, the inefficient rollout, it's been pretty FUBAR, and for that, some businesses are going to be gone by the end of this because they never got the timing right on how they could receive their funds, or they've already gotten down to a skeleton crew or just the owner because they've had to let everybody go. And so
what disqualifies them from the PPP loan?
Yeah, I mean, I guess theoretically they could use last year's numbers to get the loan and then rehire everybody. I think that would
rehire everyone.
Yeah, I think that would be fine, because you assert one thing we had to do before we finally got our funding approved was to submit a first quarter 941, which shows the active number of employees on payroll as of that point, right? They want to have basically, and the reason why the SBA and banks are relying on federal forms is because they're assuming, I think, wisely, that you're not going to lie to the feds, on your tax filing stuff,
right?
Especially not knowing that this sort of circumstance was going to come, and not knowing that this sort of program would even be there, right? So they're basically having most businesses use 2019's numbers as set forth on your filed 940 and 941s, and or if you've already done 19's taxes. So if you submitted a 941 that showed like 4 employees, and then you quickly thereafter had to lay everybody off, if you then got the PPP money and hired everybody back, I think you'd be in good shape.
Okay,
and I think that's probably the incentive that the SBA wants to give is to even if you had to unfortunately lay people off immediately, like restaurants and stuff like that,
right?
If you can hire them back. And I'm not sure how that's actually working with like restaurants and hair salons and that kind of thing.
Right.
But certainly that would be, the purpose of the program is to keep people off unemployment.
Yeah, that's a difficult thing to kind of unpack, because if you if you got rid of everybody and you need to rehire them, but there's still no business happening, what are they going to do working for you?
That's it. Yeah. And especially in these sorts of positions like a server or bartender at a restaurant, that's not like a gig economy kind of thing where you can just kind of sort of go off and do it yourself or try to drum up business for yourself. But, I've got friends who are obviously, gig economy workers like photographers and stuff like that, where it was more event based and, weddings and that kind of thing. And it all kind of went away. But, there was still, even when this program rolled out, the guidance at that point was only for businesses that ran payroll. So if you were a sole proprietor, or if you, were an LLC with a disregarded entity and didn't run payroll, independent contractor, gig economy, sole proprietor, that kind of stuff, where there just wasn't payroll, there wasn't a 940, there wasn't a 941. The SBA slow rolled out additional guidance on that. Like, are they even eligible? And of course they are. And looking back, I'm a member of a lot of different lawyer groups on Facebook, and some of them, some lawyers are true solos where they do everything and they just cut themselves checks every month. They don't have payroll. And those types of people were initially thinking they were going to get cut out of this program entirely because, we don't have payroll. How could we qualify for a payroll protection program?
Right.
And then, businesses like ours, we have a PLLC that files as an S Corp. So, those sorts of, structures are meant to save taxes on the front end. But when you, roll out programs like this, previously it was the sole proprietors that were paying more tax and they were disadvantaged by not paying themselves payroll. Now it's flipped. Like, people who are, S Corps, they're only able to recover or use the actual salary of the owner, not the actual total compensation. And for sole proprietors, you're using total 2019 income numbers. So it's sort of like, obviously nobody knew this was going to happen, and this program just sort of happened the way that it did. But, people who were sort of getting the raw end of the deal on self-employment tax and that kind of thing by not doing payroll are now, potentially getting a lot more benefit from this program than the company owners who did, run payroll. And, it is what it is. But it's been interesting to say the least, just because of, the differing guidance and what you're seeing in the news. And, there's a lot of emphasis on, drama in the headlines and that kind of thing. And so there's already been enough of it from COVID. We're seeing death numbers and infection numbers and what is the president doing today and all this kind of stuff. But then you sort of compound that or add gasoline to the fire with how poorly this program was rolled out. And then, it runs out of money, and then everybody's like, okay, what the heck am I going to do? There's no more funding.
Right.
There wasn't, and everybody, sort of had pretty strong assumptions that Congress wasn't just going to let small businesses die. And so, we sort of, it's funny, COVID kind of created the birth of a lot of different, common terminology now, like social distancing and
stuff. Oh, yeah.
One word that we hear all the time with the PPP program is tranche. Tranche is basically like a wave of money or like an additional source of funding. So every time, we sort of heard about the money running out on the first round, it wasn't that the second round was coming. It was like another tranche of money.
Right.
Like, I've never heard that word prior to this SBA program being
talked
about. So interesting, right? And those are the sorts of things that you'll see in like Urban Dictionary, sort of pop up and be more, useful terms moving forward, I guess. But so the assumption was another 250 billion was going to come down the pipe, and what that looked like though was really up in the air because anytime you've got a divided Congress, they're going to have their own priorities and their own preferences and the Democrats really wanted to provide funding to make sure that, there was additional funding for hospitals and medical professionals and those sort of things. And there's been this talk of the Democrats trying to push for mail-in voting as just a provision on some of these funding bills. And so what the end bill was going to look like, nobody really knew until it dropped, and it ended up being another almost 350 billion. I think it was 320 or so. And so people started to breathe easy again, saying, okay, there's another round of funding. We can get back in line. If our loan application was already approved, then there's nothing for us to do. We just have to wait for the money. And then you see further issues with the rollout, and it's just issues that had already existed but are now there again, or never got resolved, right? So I just saw, yesterday, I have a couple friends who applied at multiple banks because they wanted to basically see who could get through first. And basically whenever you get the SBA numbers, whenever is whoever the bank you got it through. So the SBA approval number was sort of your, queue number, that's where you sat in line.
Mm-hmm.
And so once you got the SBA approval number, your loan was guaranteed. Your amount was earmarked against the overall funding. And so I saw probably half a dozen posts on various groups yesterday about people who applied at multiple banks, got an SBA approval number somewhere, and then didn't know from who, and there wasn't a way to check on it. There wasn't a way to pull up the SBA and say, hey, I think I have an approval number, but I don't know what the approval number is, and I don't know who the bank is that I got it from.
Right.
So, the time that, the clock is ticking because all of these funds are supposed to be used by the end of June. And so here we sit May 1st. I bet a bunch of people either did payroll today or they did payroll yesterday. Like our payroll is always the 15th and the last. So ours went yesterday. But if you're still sitting on all this, potential money that hasn't even hit yet.
Right.
The ability to spend it on payroll expenses is going to be difficult the longer it takes. And so I would expect that, Congress, if they do another round of funding, they may need to revisit that spending deadline just because of how slowly this is actually rolled out. But one thing that is potentially a saving grace is only 75% of the funds have to be used for payroll. You can use the other 25% on like rents or loan interest or other, business related expenses. So that's good. At least there's also the ability to, you can, if it was in the normal course of business, to give bonuses to employees, to give raises, right? There's no requirement that you pay your employees what you paid them in 2019. That wouldn't really make a whole lot of sense. Increasing scope or increasing hours, those sort of things. But generally that 25% that's non-payroll is supposed to be used for rent or lease payments, utilities, and then like more mortgage interest. But so it's not all payroll. So that's at least a saving grace. But, and to be clear, those are the forgiveness guidelines, right? If you want the loan to be forgiven, you have to use 75% of it on payroll, the other 25% on those few different business expenses. So it's been an interesting process. Yeah. We also, one issue that's kind of left outstanding is we don't have really clear guidance on the, how the SBA is actually going to, the steps that are going to be taken to approve forgiveness. It's just sort of like, when those rules come out, then you'll be eligible for forgiveness. So what does that look like? And so how do businesses posture themselves for the best possible outcome without guidance, without rules?
Right.
And, so the big thing is, like what we're doing and what a lot of, banks are recommending for clients is to set up a different bank account just for the PPP money, realign your payroll draws to basically, take the payroll funds out of that account so that it's clean. You'll be able to show a payroll tax form. You're going to be able to show the actual payroll processor records. You'll be able to show any, Schedule C if you're a sole proprietor. But you'll be able to print, clean bank statements that only show payroll expenses coming out. Or you could potentially move a portion of it over to operating to pay your rent or something like that. But that's the best, I guess, posture that people can put themselves in right now, absent additional guidance. But even at the end of the day, though, like if nobody gets qualified for forgiveness, this is still a very solid, lending terms. 2 years at 1%.
Yeah, you don't see that anywhere.
Yeah. I mean, you're never going to beat that. Let's see. Oh, we just got IRS guidelines this week about how PPP money is going to be treated, and then how the expenses that are paid for with PPP money will be treated too from a tax standpoint. And so the general conclusion is that the PPP money is not taxable, but the expenses that you pay with the PPP money are not tax deductible. So it's sort of like this flat zero tax impact kind of thing.
Mm-hmm.
And I've seen some people complain about, oh, well, now our taxes might get screwed up because we can't deduct rent, or we can't deduct, payroll for that, period.
Right.
It's like, I get it, but in what world do you live in that free money is a bad thing?
Yeah, free money. Yeah. It's still free money. So.
Right. And I get it. Then so you need to have a good CPA that can proactively forecast your tax liability and adjust accordingly.
Right. Right.
But I've never before seen people complain about getting free money. So
that's America for you, though. So
that's right. But it's also it's to each their own. Some people are victims, and some people always want to have something to complain about, and
right.
They look a gift horse in the mouth, so to speak.
Mm-hmm.
So that's basically it. I mean, it's a great program. Obviously, I think they probably casted a wider net. They probably should have done a better job on the individual stimulus in casting a wider net rather than the payroll protection program. I think it probably would have been a better implementation, and definitely more of a headache, I think, for businesses who actually needed it to prove actual need. But if there was an element of needing to prove need, I think you would have seen a lot fewer applicants, a lot longer runway for the expanse of that initial round of funding. But I think the thing that people are sort of forgetting is, okay, yeah, we all just got $1,200 or whatever you got, right? Simply $1,200, $2,400, $3,400, whatever your family amount was. That was supposed to be essentially the individual equivalent of the PPP program, basically to get you 8 weeks. Like whose expenses for 8 weeks are only $1,200?
Yeah.
No one. And also, how can you possibly have a program that applies equally to New Yorkers and people who live in the middle of nowhere, Alabama, where the cost of living is night and day different?
Yeah, they're not even close.
But also, they basically said that if your family made $199,000 or more in 2019, or in 2018, if you hadn't done 19's taxes, then you don't qualify for any of the stimulus money.
Yeah.
Well, what if you lost your job?
Yeah.
What if you took a drastic pay cut in 19 from 18 and just hadn't done your taxes for 19 yet?
Yeah.
What a crappy rollout. What a crappy parameter to base that on. But also, what an unrealistic standard that you think that the United States, our average individual, is going to be sustained by $1,200.
It doesn't make any sense.
It
doesn't make any sense.
It's terrible. But and then I don't see any you see other countries that are saying, yeah, we're going to do $2,000 a month every month for everybody, and there's no discrimination based on what you make or what you do or anything like that. And then here we are saying, here's your $1,200. And by the way, if you did really well in 18, you get nothing.
Yeah, you don't get it done.
And by the way, we don't have any plans for another distribution.
Yeah, that was it. Well, I haven't heard anything about any more money for any individual.
Well, and by the way, if you get paper checks, you're going to have to wait for Donald Trump to sign it first. And I got a letter in the mail yesterday confirming our money came, right? We basically just got our kids' amount, and we had already gotten it via direct deposit. It inadvertently went into my corporate operating account instead of our personal account because that's where we pay taxes from. But the letter came yesterday, basically informing us again that we got that money via direct deposit, with that big Donald Trump Sharpie signature at the bottom.
I actually had a friend that got that letter before they got their stimulus check.
Wow.
So they got the letter saying we sent you the money, and then they were like, well, I have no money, but I have a big letter signed by Donald Trump.
Thanks so much. This will keep me fed.
Appreciate it. I'm hanging up on the fridge. Oh man.
But I doubt this is the last we see from the SBA. I think that this, next 300 something million, or I'm sorry, billion. Wow.
1,000 million billion.
300 something billion is not going to last long either. especially with the current parameters for eligibility.
Mm-hmm.
But I think the next line of drama that we see is if we see another round of funding. I think there's going to be some real push to try to attach some other relief to it, not just refund the PPP program.
Right.
And that's probably going to be voting stuff. It's probably going to be some funding for state and local government. It's probably going to be some additional funding for preparedness or something, right? They're probably, the issue with politics is politicians can easily see these bills as very opportunistic and trying to drive their personal agendas. And
it's just not the time for that.
Right.
Really.
Exactly.
And realize. Yeah.
I think that the voting thing at least is tangential to this, and it's part of COVID. You really don't want to incentivize people to have to go in-person vote in November if all of this hasn't been resolved by then, or if it comes back in the fall. I don't think we as a country should try to push people, to go stand in line, especially when the people who conduct polling are mostly elderly people.
Right.
If you've gone to vote recently, like I went on Super Tuesday, and pretty much everybody who was running that polling location were vulnerable people, according to the CDC guidelines.
Yeah, it was the same.
So not only are you not going to have those people, you're going to have a potential outbreak just by lining up. We saw that in Wisconsin.
Right.
I don't know. It's I think there's an element of thinking in the moment, and and an element of thinking proactively for the future. And I think at some point we need to really address that. But I don't know. It's as with most things right now, you got to take one day at a time, and put your right foot in front of your left, and then your left in front of your right, and just keep moving. But definitely strange times.
Yeah, for sure. Yeah.
Well, I guess that's probably it for today.
We really unpacked the PPP.
Yeah, we don't want to beat that dead horse too much. I know a lot of people have done content on PPP.
Right.
So, but it's timely. Obviously, May 1st. It's still very much so being rolled out, and we'll see at the very end how successful it was. But we're obviously grateful as a business to be able to participate, and we know plenty of people who have been greatly impacted by it, but unfortunately a lot of people who are still sort of standing in line with nothing, waiting for their day to come. So anyway, so this was episode 2 of the PlanWell podcast. We're so grateful that y'all take a time out of your day and listen. If you wouldn't mind subscribing, sharing with friends, let us know what you think. We'd appreciate it. Look out for more episodes, and have a great day.
See ya.
Thanks for tuning in to the PlanWell podcast. We will see you next time.